Apple's market challenges. Shifting our focus to Apple, the tech giant faced challenges in the fiscal first quarter, with a 13% drop in sales to $20.8 billion in China. This decline fell significantly short of the $23.5 billion predicted by analysts, marking Apple's weakest December quarter in the Asian nation since the first period of 2020. The sales downturn in China raises questions about Apple's position in one of its critical markets. As global competition intensifies and geopolitical tensions impact business operations, major tech companies like Apple must navigate challenges to maintain market share. In a concerning development, U.S. officials have issued warnings about Chinese hackers targeting critical infrastructure. FBI Director Christopher Wray revealed that hackers linked to the Chinese government are preparing to cause real-world harm to Americans. Potential targets include water treatment plants, the electric grid, oil and natural gas pipelines, and transportation hubs. This revelation underscores the increasing dependence on technology and the potential vulnerabilities associated with interconnected systems. As society leans further into digital integration, the risk of foreign adversaries disrupting essential services becomes a critical consideration. Now let's shift our focus to personal finance. A pressing question for investors is whether to ditch bond funds, as some experts suggest. The challenging year for bond funds, driven by sharply rising interest rates, prompts a reevaluation of their role in diversified portfolios. Contrary to the long-standing belief that bond funds effectively diversify equity portfolios, the current environment challenges this assumption. Bond funds, whether in the form of ETFs or mutual funds, differ significantly from individual bonds. The continuous fluctuation of dividends and the perpetual nature of bond funds introduce complexities that individual bonds do not face. As interest rates continue to rise, the underlying value of bond portfolios fluctuates, creating potential challenges for investors. Against the backdrop of high interest rates, investors are contemplating the wisdom of locking in consistent bond returns. While traditional thinking might sway towards the stability of bond funds, the current environment challenges this notion. The fluctuation in underlying values, coupled with the absence of a maturation date for bond funds, introduces risks that investors may not anticipate. Locking in consistent returns through individual bonds over a specific time horizon, aligned with an individual's goals and retirement plans, emerges as a strategic move in the face of market uncertainties. This has been Vision Global News Network. Don't forget to like, follow, and share.